Well, the tech sector getting hammered today over worries about Apple's iPhone demand for the quarter. But with some of the biggest names in tech reporting next week, the big question is what should we expect now? Joining me to discuss, Steve Dudash, the president of IHT Wealth Management, Dory Wiley, the CEO of Commerce Street Holdings, and David Nelson, chief strategist at Bell Point Asset Management. Steve, let me start with you. First, let me start with Apple, the stock of the day. A lot of anxiety from that news out of Taiwan Semiconductor. I thought the media, the financial media, went overboard today on this Morgan Stanley concern. I thought it was really dangerous, really, how crazy they went. When the analyst drops their price target from 203 to 200, that doesn't seem like the end of the world to me. I don't know.
Right. I can't agree with you more. And I think you said it in the segment before. Just relax. We've seen this how many times? So they're probably going to sell a little less Apple phones right now. Whatever. They're buying other phones. Take advantage of all the chips got crushed this week because of it, because the fear that they're going to use less phones. They're going to use more data in the future. They're going to use more technology in the future. It's only going to grow. How many times have we seen these kind of dips, and then if you buy into it, 12 months later, you're patting yourself on the back. So just relax, go with it, and take advantage of people overreacting to something that is kind of trivial to drop the stock price by $3.
Well, one thing we do know is that every day after the close is going to be angst-ridden because you're going to have the big names, right? The Googles, the Facebook, the Amazons, Intel, all after the close. I think Twitter's the only name that really reports before the close, but it's not the bellwether, right? It's not the one that's going to set the stage here. Dory, tell us what to expect, because I think you like some of these names as long ideas.
I really do, and I'm hoping there'll be some bad news, not terrible news, but just maybe some volatile, headline news, kind of like with Apple today, because it presents buying opportunities. So, I love Facebook here. They're really cheap. They got tons of cash, massive operating margin at 50%, and 12 times EBITDA valuation. So, there's a little more nervousness, and that stock comes down a little more, I'll be buying. I think Google looks pretty good here. It's got a lot of cash, but they've got some of the same data usage problems, that Facebook has. Apple looks great here, though. I love those three. Now, I'm thinking that Netflix is a little overvalued, Amazon is a little overvalued, so regardless of what happens with those two, I'm probably not a buyer.
Ironically, those are the names that had really great weeks this week, right? Because they just continue to deliver. How do you apply valuation to these tech names anyway? It's really tough.
I try to use a PEG ratio, and some of these names are kind of expensive.
You judge the rate of growth that's more important to you. Yeah.
Correct. Price earnings to growth. But some of these names are kind of expensive, like a Microsoft, great company, but it's trading at 26 times. Its terminal growth rate is somewhere around 10%. That's kind of rich. Apple isn't the only bad news out here. Washington is a big part of this. Make no mistake about it. Business models for some of these big cap tech names are going to change. Facebook, Mark Zuckerberg is telling you that, and if you're going to opt out with consumers in terms of what they're going to share with you, that data is worth less. And
but once a consumer has a chance to opt out from the very beginning of the relationship, and they don't, then nothing changes, right, for Facebook?
Some people are going to opt out. I mean, I've done my best to opt out. It's pretty confusing at this point, but it's going to get simpler, and Congress is telling you that regulation is coming. So there's better sectors out there for me right now. Tech
what do you
is
like,
great.
Real quick?
Financials all the way. I mean, the dynamic is great. They're cheap to the market right now, and they're growing at about double-digit rate growth. Bank of America, some of the others are just wonderful.
Steve Dudash, you got a couple of financials. I'm sorry, go ahead, Dory.
Well, I was just going to say I like financials too, but we got to watch financials because as we're raising rates here, there's an issue on this loan growth, and some of these banks are slowing down on their loan demand and loan growth, and that's where we start to take credit risk. So we really got to watch that.
It felt like though in the last couple of days, financials became something of a safe haven. Steve, real quick, you got a couple ideas to share?
Yeah, don't buy Facebook. They got problems beyond just, their multiples are fine and whatever, but the regulations coming and their internal regulations coming where they're going to hold back their ability to grow on the inside. So watch out there, any tech right now. But again, I would do the semiconductors. Go after it. You're going to buy them 11% down this week. Take advantage of the cheapness of it. And next week's earnings, they're going to be good.
I'm looking at my chops
Go,
also
just
for so
buy.
many semiconductor
Yeah,
names
exactly.
also. I think it's nuts. There's some companies with less than 5% exposure to Apple, and their stocks are down 7-8%
Right.
in the last
And
2
they got
days.
crushed for no
It's
reason.
ridiculous.
Exactly.
All right, gentlemen,
Agreed.
thank you all very much. Appreciate it. You know, deaths from cigarettes and the death of cigarettes and the rise of marijuana, all converging today. By the way, it's National Weed Day. A lot of people, though, say, how can I make money in this? Because forget the social implications. It's real. People love it, and it's becoming legal around the world. We'll discuss that next.